Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, August 10th, 2018. In this video, I wanted to cover some of the silver mining stocks. There's not many. It'll be a shorter video than yesterday's video on the gold mining stocks. To that point, I put together a video on the gold mining stocks. We have an official long trade out there on GDX right now, um, and I wouldn't do back-to-back coverages on related stocks. What I mean by that, a lot of the components of GDX, a gold miners ETF, are also, they also mine for silver. So there's some overlap. I don't know if there's any pure play silver or gold miners. Maybe there are. Some obviously have a higher focus on the pulling, mining gold. Some focus on silver. But again, there's some overlap there. And obviously those sectors tend to move very in close proximity. So if you're going to trade GDX and any of the individual components, keep that in mind for your weighting, your overall exposure to the sector. Same with silver stocks. So what we're going to do is start with an overview of silver. We'll look at the ETF SLV, which I have up here. We'll quickly look at the charts of SIL, which is the Silver Miners ETF. Again, will be similar to trading GDX, except sometimes one or the other is outperforming. And what prompted me to do the video was a request from member Suncor123 in the trading room, who mentioned, can you look at First Majestic Silver, the symbol's AG? And he's mentioning it took off like a rocket last time. And that's my experience. When the silver stocks move, they can really move. Same with the gold mining stocks, but there are some silver stocks that tend to, they seem to me that they outperform, and historically they have. I mean, big rips. And you can look at just the silver ETF alone, or no, this is the silver. We'll get to the mining stocks in a second. So let's start with silver. And again, it's a way to twofold. The purpose of this video is twofold: to give you trade ideas if you prefer to trade individual stocks, because I can say this: if you can sniff out the most bullish stocks within the gold and silver mining sector, you can vastly outperform the ETFs, because the ETFs, you have safety in numbers, but you're going to have a basket of stocks. Some will underperform, some will outperform. So that's purpose of this video number one. If you want to hold, if you're flexible enough, have the time to diversify, and want to put forward the effort, you can most likely outperform if we get that rally that I'm looking for in the metals. And number two is to kind of give an overview of the sector, whether you want to go with one of the ETFs or both of those ETFs. It at least gives you an idea of what to expect. In other words, do the charts of these individual stocks confirm what we're seeing on the ETFs and, of course, the metals? Now, with all that being said, the success or failure of a GDX long or a SIL long or any of these individual stocks for that matter, it will largely hinge on a rally or reversal in silver and gold soon. So we'll start there. Again, they're either going to pan out or not because they will follow the metals. So let's just dive into the charts here. This is SLV. We're looking at a daily chart, 2 years. What stands out to me, you can see that I have some things circled on the charts here. Most importantly, these oversold readings, simple yet effective. It doesn't work on every security, but if we look at, you can see we recently were coming off oversold levels. We were oversold here and here. And the thing about oversold, this has been my experience, they come in one of two flavors, if you will. What I call a one and done oversold reading. You hit oversold and that's it. And then you rally from there. Or sometimes you get a double tap reading. In this case, we had three consecutive oversold readings, and were higher than the last. Each was higher than the last one, so that gave us positive divergence. You can see the indicators, this momentum indicator sloping up with prices sloping down. Now, with that being said, each and every oversold reading, so we're going back for 2 years here, without fail, each and every oversold reading, if you went long, you would have been rewarded, even if you stepped in a little early. Now, like I often say, I don't trade oversold or overbought by itself as a buy or sell signal, but in this case, you can see you had a 10% rally there. I can't move too close. I grab the lines and they move, but that's 7%. And then finally, and again, this is important, you had these three consecutive, which led to one large divergent low, and that led to a 17% rally, or actually until that terminated there was about 18%. And surprise, 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 that rally terminated in a divergent high. So these are the things I like to sniff out, but they're not necessary for a swing trade. Someone even asked me that recently about going long or short without a divergent high or low. No, it helps. It certainly helps to confirm a trend change, but um, you can also very much look at, oversold, overbought levels. There was no divergence here. That was a one and done overbought reading, and you can see that mark the high in silver. We had a couple of double tap there. Double tap is what I call when you get two overbought or oversold readings in close proximity. That one was also negative divergence there. The first one was lower, prices went up with the indicators making equal or lower highs. So, all right, let's not spend too much time on that, but that's how I look at this. So right now we have either a one and potentially, we'll see if there's a rally. And if we don't rally from here, it'll be the first time in 2 years that silver hasn't mounted a substantial rally. So again, guys, I wouldn't be doing, spending the time and effort to do these videos if I didn't think there was pretty big potential there. I know nobody wants to touch the miners right now. They're toxic. It seems like gold and silver for the life of them can't catch a bid. But that's usually when the rallies come, when everyone's given up on the two. So there's no guarantees. Maybe wait for the charts to firm up, but right now, if history repeats, we're looking at the potential for a nice rally here. And my targets, just to give you a quick idea on silver, be 1522. There's a decent resistance level there, and then that downtrend line. And to try to quantify it for you, and please keep in mind, if you get this would be about a 5, and little actually grabbing a little higher than where we closed yesterday. Call it 5 and 11% rallies. You can expect double that in many of these silver mining stocks. So just keep that in mind because they tend to, like gold mining stocks, I often say it's a leverage play on the metal. So where I'm going with this is we may get a one and done here, and if we don't, there's certainly the possibility if we get another thrust down, I can visualize it. I can see it right here. One more dump here in silver, and it would look something like this: a little pop down here, reverse, take out that. This is support, by the way, this 1443. I have that line here because it's this previous reaction low right here. Right there. I'm trying to grab a circle tool and show you that. So this isn't a random line here. So if we break that support, and that would also jive with that flush out move that I had in gold and the US dollar and everything else, that's a scenario there. But we may not need that. We may get the one and done. That's why I'm already starting to build exposure in this sector with room to add, whether we get a flush out move or reversal, or we start to firm up from here if the charts start to firm up. All right, enough on that. Let's move on. If you want to look at some micro levels, this is another board I have on silver. Showing you all some of the levels to trade off of. Now let's look at real quickly the Silver Miners ETF. I hadn't even marked this chart up yet. I just want to go over some of the individual names, but you can see we have potential divergence. Excuse me, might not look like much there, and we need to turn up on the PPO. We need to make a bullish cross. That's why I called it potential divergence, because right now the momentum is to the downside. This momentum indicator is still pointing lower. So if we can get a reversal soon, you can see prices are making lower lows from the previous low over here, with the indicators so far making higher lows. But we need to put that low in place and see this indicator turn around soon. So there it is. That's the case for Silver Miners ETF. I didn't really take the time to mark up targets, but I can tell you right now, let's just say, oh, that's a minor resistance level. If you want to target, I would say maybe right here. That first target is about 30, a little over 30. And let me move this line down because, again, I haven't adjusted this chart in a while. I'd have to study this one a little bit more. And I gave you the near-term targets on silver. We can correlate with that. But remember, I've also highlighted quite a bit recently on gold, the case that gold still may be in a bull market, that with gold bottoming back in late 2015. And if that's the case, the potential for the silver mining stocks and gold mining stocks, these are just near-term swing trade. Let's just call these bear market rally oversold bounce targets, if you will, because everything, the metals and miners in a downtrend. But do not underestimate the upside potential if gold and silver hold those lows, and they're headed a lot higher in the coming months to years. So if you're a long-term investor trader, you can most certainly, if you get in here soon and we start to reverse and you go positive, set a stop at break even or trail stops up and allow for, what will be high double digits to possibly triple digit gains on some of these ETFs that hold the metals or the miners or the individual mining stocks themselves. So without further ado, let's jump into that. I'm going to pull up a list. Let's see, AG, and then I have that will load a watch list down here that has about a dozen or so components. We'll go through these in order of market cap. Let's see, let me sort these descending by market cap. Yeah, first one be WPM, and again, there's only about a dozen, so I'll go through these quickly. WPM, what I see is I have a support level here about 2055. Quite a few reactions in the past. Not a super solid support, but enough. I see enough reactions. I've had this line here for quite a while, and that stock has had you know behaved well off that line. You had this uptrend line here, and again, you can swing trade these metals. The bigger picture is they've been in a just at least this particular stock has been locked in a sideways trading range now for what is that, about 2 years, a good couple of years, yeah. And so from an investor, you've gone nowhere. A swing trader, and that's where I love these metals. I'm short, long. I love trading these miners because they move quick. Fewer sectors that I know of can put so much money in your pocket in short order. When these things run, they can run easily double digits, well into the double digits, and sometimes even days. A lot of these individual miners can have a double digit gain in a day on any good given day. And then so you're talking triple digit, high double and even triple digit gains within a month, a couple months when you get the right trend, whether it's on the short side or the long side. And again, that's why I'm spending the time and effort doing this video. There it is. So 2055 is support. We had a bearish rising wedge here. It broke down, and we've certainly met the measured target. That doesn't mean we can't go any lower, but the measured target being the widest part of the wedge. We broke down, back tested, and then moved down to support. Here we had a breakdown and we fell to this support level, and you can see that one was well defined. So there's another point here, is that these stocks trade very well to the technicals. So there's WPM, bounce targets. Well, let's just say at minimum the top of the range there, about 2290 or so. That would be a swing target for you. And of course, more powerful, longer term. Don't ever forget the bigger picture on some of these. Sometimes you can have a runner trade where, as I said, you get in here, position, set your stops at break even or trail them up, and position for a breakout above this pattern. That is a very powerful basing pattern, if indeed it is a basing pattern. It's a consolidation pattern. No one can argue that. We've gone sideways for 2 years. So the bears might say, well, that's a consolidation pattern. We're going to break to the downside and go a lot lower. Certainly a possibility. But if we go to the upside, again, this is fuel, if you will, to launch a much longer lasting, powerful rally. Potentially, that is. PAAS, Pan American Silver. I've traded this one on and off over the years. It's just, these things are rocket ships when they run. Here's a, 51% gain in 1.5 months. So just, 6 weeks or so, 50%. And again, you can do the same thing on the short side. You can do it on the long side. There's a rally right there, about 27% in very short order. So where are we at today on this one? And again, just look at the history of these, trades in these, these rips and dips. And right now, most recent analysis, or I guess I should say the salient technical developments on this one. We had a divergent high right here. There was a divergent high. We had an uptrend right there. That uptrend line was broken. The stock fell. Put in a divergent low, very small divergent low, but sometimes it doesn't take much. Positive divergence right there, and a big pop. And there's an example right there, 9% gain yesterday, moving up impulsive. So some buyers are stepping in here, and a lot of times that's how these rallies start off. They start off with a bang. So there's one target, I'd say probably up here. This would certainly be a natural target. That's about 19. I'll tell you what it is. It's 1950, we'll call it. From where we closed today, that'd be about a 12% gain. And next one up, AG. I posted a chart in the trading room. That's the one Suncor 123 requested. My take on this one was, and you may have noticed this. If I didn't point it out, again, I showed it on silver, are these oversold readings. Very important to look at. If we go back in time, let's just do this. Let me use this drawing tool here. We look at each and every oversold reading. I'm going through here without fail. So here's when we were oversold. And this was in a vicious, bear market here. We were oversold, but we had a rally, rally, rally. These were all bottoms. So just, I mean, it couldn't get any simpler. If you wanted to use a very simple, basic strategy, you just buy this stock when it gets oversold. Now, sometimes you can get burned because oversold, like I say, can stay oversold, just like overbought can stay overbought for an extended period of time. So overbought, although in these cases it was one and done. Yeah, you could have shorted or unloaded the stock if you were long when it was overbought, and you'd see your exits were perfect. But this isn't coincidence. There's too many instances here. This is how these stocks trade. And again, as I said, there's no guarantees, but trading is all about probabilities and putting the odds in your favor. And so you go long here. And my analysis, by the way, on this one was you had a very well defined uptrend line, which was recently broken. We were overbought. Was a little bit of divergence there as well on that one, broke down and set up in what appeared to be a bear flag pattern. Now, I say this often, fewer things in trading or investing are more bullish than a failed bearish pattern breakdown. So if the bears, the metals, in bears and AG or in silver, we're looking at this as a bear flag continuation pattern or a bearish pennant, which it certainly takes that appearance, and shorted that breakdown. Well, yesterday we had a big green candle. Bear flag patterns and bullish and bearish pennants, if you're not familiar, you can look up what those are. You have an impulsive move leading down, which is called the flagpole, then an area of consolidation, and then an impulsive breakdown and an impulsive move out. Now, it's important that the move out of there is supposed to be equally as impulsive as a move down. And now, one day doesn't make a trend, but yesterday we had a big green candle and it back tested this. So that's a uh-oh moment for those bears or shorts that jumped the gun and shorted AG. And if we get another green candle, it will have foiled that breakdown, and then that could set the stage for a nice rally up here at about 764 or so. You can see some potential targets there. But again, oversold. And the other thing I mentioned, 605 is a decent support. So if we do get another leg down in the metals, which I still can't rule out at this point, 605 is a very well-defined support level. You can see all these reactions there. Certainly an objective level if the charts confirm at the time to step in. And we may get, if we got down there, we might have a bullish divergence like that scenario I laid out on SIL, or was it SIL? Or SLV, silver miners or silver metal, one of the two. In the beginning of the video, I laid that out. FSM, next one up. I don't have, this isn't a well-defined trend line because I only have a couple reactions. I can draw it this way, I can draw it this way. I could say we're there right now. I could play around with it. So not one of my favorites, I have to say that. And not that it can't run, it just I don't have any well-defined support levels or anything here other than we're deeply oversold. And again, let's just play that game of uh, using the simplest strategy in the world. If you just every time step in, every time the stock became oversold in the last or very near oversold in the last few years, you would have had, on average, these are, let's see, that's, 38% right there. So I'm going to say on average, these are probably 20 plus percent rallies off oversold. And this is the deepest oversold reading we've had on that one. Next one up, MAG, bullish divergence potential. We need to turn up here on the PPO. Oversold, again, very simple but effective. If you stepped in every time that stock was oversold for the past 2 years, you were rewarded very handsomely. We're talking well into the double digits. And just to kind of give you again an idea how much these silver miners can run, there's a 76% rally in 1.9 months. I'll take that on any given day of the year or any part of that, even if I don't milk the lows of the highs, which we're usually not going to do. If I captured half that rally, I'd be happy. And I think most of you would as well. So again, that's the point for this video. A lot of potential in these guys when they run. SVM, Silvercorp, we have an uptrend line here that was broken. We moved down, not very impulsively. Now we're pushing up against this downtrend line. So this one's poised to break out. If we break out above that downtrend line, that'd be quite bullish. I'll have to give you some price targets later, but let's just say right now I can easily see that reaction high up there around 343. It's a low price stock, so be careful. But what does it mean if you go from 286 to 343? About 20% or so. Oversold right here. Last time we were oversold was right here. And if you happen to buy at that oversold reading and milked it to the high, you were about 43, 44%. Same here, oversold, oversold. This was actually divergence. And again, I mentioned that before. Sometimes you get what I call the one and dones, and sometimes you have a series of consecutive oversold readings or divergence, as we did here. So you were oversold, you had a pop, oversold again, pop, pop, pop. Finally, that these consecutive divergences build. This is what I'm talking about in the stock market too, the broad market. It's not that, we haven't those divergences haven't played out for a really big correction yet, but they very well could as they continue to build. And then finally, this was like energy, building up. And as I said, this one was a 123% rally. And here, I'll tell you how long, because it's just incredible how these things can run. 1.9 months, about 117%, and that came off that divergent low. So right now we're looking at a potential breakout. I already give you targets, so let's move on to the next one, and then we'll wrap this up. A couple more here. EXK, Endeavor Silver. You had a downtrend line, bullish falling wedge. You can see the positive divergences, breakout, back test, and that back test and that breakout. Um, it didn't fail. It actually, well, the breakout itself, this was tricky. This one would have been tricky to trade. I have to say that because we broke out, we back tested. Finally, it looked like it gave up that trend line. It did briefly, snap back above it, back tested again, and then boom, finally, after enough back testing, this thing said, all right, let's run. And it rallied from that point. I'll just have to measure from over here up. That was about 50% rally right there. So if you rode that one out, you were paid off for going long at the divergent low or the breakout. Ideally, on these bullish divergences are nice. And then you had bearish divergence here that told you if you were in that one, hey, we have a bearish rising wedge. This line here is a negative divergence line against the indicators, and here's your uptrend line. So you should have been warned. This was divergent high coming up to resistance. Then it broke down, broke support. If you didn't get out then, that was, or short, that was your signal. And now we've come full circle. I think we've certainly corrected enough. Doesn't mean we can't go lower, but this, I see some really nice support right here around 235. This one I like. I really like this one coming up here. You can start scaling in now, buy it down to 235. 230 maybe. I wouldn't, stop out right away. There's support all the way down, yeah, but to about 230. And so I would scale into this one from here down to about 230 with a stop somewhat below. These guys are volatile little stocks. So if you have a stop at 229, they're probably going to clip it. Give it a little room. It's a low price stock, I know, but the key to trading that is don't put your full position size. Take a fraction of what you'd normally take. That will allow you to use a 10, 15% stop loss. Why? Because you're targeting 50%. I think this one, if it rallies from here, the potential is about 40 to 50%, and possibly a lot more in the long run. Again, we need to see the longer term case firm up. GPL, Great Panther Silver, I could draw some divergences here. They're not very strong. These are flattish type indicators, but they are nonetheless. We have some divergence there as GPL makes low. This one gave up a pretty key support level here, about 112, and that's now flirting with that $1 level. Very high risk, but also high reward. If this snaps back, that would be the first target. It's about a 12% gain. And maybe, again, it all depends on how the metals do, especially silver with this one. There's a potential it can get back up to the top of the here, and that's about 146. So you're talking, well, we don't need to measure for that. It's about a 46% gain. USAS. America's Silver Corp, nice support. You can see all these, a couple reactions there, reaction there off that 250 level. Boom, big rally yesterday, 5% gain. We had some bullish divergence there. There's a downtrend line to watch to be taken out. There is a support level here. I'll give you that as a target if you like this one, 293. That would be my first stop, little reaction there, and then ultimately continue on up here at about 328 and possibly more. That'd be about a 21% gain if it gets there. ASM, bullish falling wedge, confirmed with divergences. There's a downtrend line to watch, and that 113 level was support, now is resistance. And as I said earlier, fewer things in trading are more bullish than a failed breakdown. So if this break below 113 fails, those that shorted, the longs that gave up or had their stops taken out, it thins out the herd. And if this stock can pop above 113 and that downtrend line, I think it can run to where? Well, that depends. I'll have to study this chart a little bit more, but I think maybe up here at about that 150, 160-ish area. And as we're going down the line, that's about it. So there's this is the sector itself. It'll look a lot like the silver ETF or the silver miners ETF. I'm sorry, SIL. And same story. I already covered that in the beginning. Without fail, here's 2 years of price history. You can see them all circled. Let's just circle when we were oversold and what happened. You can just look at the charts. And again, sometimes you one and done, sometimes you get the double tap. And if that double tap is with positive divergence, meaning the second oversold reading is higher than the first, like it was here, those are good times to enter these silver stocks. And they're 10% rally. And again, these are bear market rallies, 15%. I'll take 10, 15% in just a couple weeks all day long. Now, if you catch one of the, trend and you look at silver stocks, this is interesting too. Um, they've been in a downtrend for a while, but looks like so far the bottom was here in February of this year. And so if we do reverse soon, before that, we may have the early makings of an uptrend here. An uptrend is simply defined as prices making a series of higher highs and higher lows. So maybe we start to see something like this going forward, and then we are now in a new uptrend. So I do that for swing traders want to just catch these rallies, get in, get out. Trend traders want to capture the bigger trends, and you can do both as well. Uh, Nothing says you can't have a position in your long-term accounts that you hold on to allow wider stops, bigger profit targets, and then in your active trading account, if you have one, maybe try to game these micro trends, if you will, which we call swing trades. Alrighty, that's it. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it. As always, if you're on the YouTube channel and you have an account there, log in and give it a thumbs up. That'd be greatly appreciated. Have a great day.